All right. Well, good evening, everybody, and thank you for taking time out of your evening on the final day of probably summer weather to join us for this super exciting topic. We have two of our mortgage lenders here to do this presentation, and I will let them do the introductions and so forth. If you have any questions as we're going through this, feel free to enter your questions into the chat function. We will monitor those and then we will do a little periodic question and answer session as we go. So Ginger, Veronica, I will let you guys take it away.
Thanks, Nicole. I am Ginger House, and I'm a mortgage loan officer with Mid-Minnesota Federal, and I have been with credit union for about 15 years.
Ginger, I'm sorry to stop you there. Could you turn on your microphone? We can barely hear you, dear.
Can you hear me?
I can hear you now.
You can hear me? Can you hear Ginger? Technical difficulties, sorry. Or do we need to put these up closer? Can you hear us?
I can hear you.
Perfect. Doesn't sound like it. All right, I am Veronica Franzen. I am a mortgage lender with Mid-Minnesota Federal Credit Union. I have been with Mid-Minnesota since 2013, so a little bit of time there. Before this, I was at another financial institution for 15 years. So I'm not trying to age myself by any means. Anyway. All right, Ginger, is yours up and working?
Nicole, can you hear me now?
It's very quiet.
Okay, so you and I are probably gonna have to share one, I think. Let's do it. So I am Ginger House. I'm with Midmin as well, obviously. I have been in the mortgage department doing home loans for about 15 years now. I've been in the industry a lot longer, but like Veronica said, I don't want to age myself. Gonna go through tonight, right? Home buying 101 and why buy a home? One of the biggest things is going to be long-term investment. Instead of paying rent, right? At least you're building equity in a property that you own yourself. And that stability and security, along with the freedom to kind of personalize your space, do those improvements that you want. And again, you're building equity in the property that you own. Yeah. Sorry, we had some technical difficulties tonight, so we're doing the best that we can.
All right, so to get yourself ready to be financially ready to purchase a home, couple things that you want to do is look at potentially getting your credit reviewed. Make sure you know your credit score. When you purchase a home, there are usually minimum credit score requirements for different programs. Couple different things you could use, like a Credit Karma. You could use your online banking apps, for example. A lot of lenders have those that you can check into, even like credit cards, for example. If you have those, sometimes those have those out there as well. Another piece you want to save some money for your down payment. So usually when you purchase a home, there's down payment, and then there's another piece that's called closing costs. So the next piece is you want to budget for the additional costs, such as the closing costs, moving expenses. I usually say figure roughly 3% of what your loan amount is what closing costs may end up being. When you purchase a home, the closing costs and down payment can't technically be wrapped up into the loan. But the closing costs, some of those, when you purchase the house, the seller could potentially help out with some of the closing costs. And sorry, I missed on the down payment piece. You don't have to have 20% for a down payment. There are low down payment programs out there too that work for some buyers as well. There is also a 0% down payment program out there too. So anywhere 3 to 20% is kind of the norm on that.
If you want to stand next to me. So, I will go over kind of the key steps in buying a home and what that process looks like. As Veronica said, if you haven't already kind of checked your credit, that's one place to at least establish where you're at. What your credit scores look like. Is there anything on credit that you have that maybe you have questions about and you're really not sure, what to do? That's going to be helpful for us when you come in, but you're going to want to meet with a mortgage loan officer, and they're going to go through with you kind of talking about credit, really what you're looking to do. Are you looking to purchase in the next few months, in a year? We have a lot of people come in and maybe they're not quite feeling ready to purchase, but they just have questions and want to get themselves in the right position for when that does happen. If you're looking where you're ready to move forward, we're going to go ahead and we're going to do an application which consists of doing a hard pull to your credit. And that application is going to be good for 4 months. We're going to gather up any income documentation that looks like pay stubs, W-2s, your taxes. If there's other forms of income that you receive, we'll talk about what we need to get from that. Part of that getting pre-approved is not only evaluating your credit, but we are also evaluating your income, answer any questions that you guys have, but making sure that you're approved for the amount that you're looking to purchase your home for. We also not only discuss, you might be approved for a lot more than where you really feel comfortable with a house payment. And we're going to discuss that with you as well as, where do you feel comfortable versus, maybe you've talked to other friends that, well, I know, they got approved for a lot more than I am. And just having that conversation of, again, circling back to where do you feel comfortable versus where you, versus getting approved for that higher dollar amount where you might be able to afford it, but you know where your budget is. Then once you're pre-approved, you're going to make sure you find a real estate agent. That real estate agent is going to assist you with finding a property and writing up your offer, which is going to get presented to the sellers. Part of writing that offer is you are going to put down earnest money. It's kind of like a down payment or good faith gesture. That can be anywhere from, 500 or higher, maybe a little bit lower. That's something that you discuss with your realtor. And that money that you put down as earnest money is also going to go towards any money that you may need at closing. You're going to get credit for that. Then once you've done that, you're going to really start house hunting. You're going to let your lender know who the realtor is that you've decided that you're working with, and we're going to reach out to them and let them know what type of loan we're doing. And if you need down payment assistance, if the sellers are going to pay any closing costs for you, if that's needed. And so they know how to put together the offer for your home to hopefully to have you get that approved. And then once you make that offer, and if it gets accepted, you're going to go through and have probably a home inspection. That home inspector is making sure that the home, kind of the good, the bad, the ugly, if you will, about the home you're buying. So kind of what you're getting into, if you will, and if there's any little minor things that need to be updated. And then after that, you look at kind of moving towards closing. What does that look like? We're going to have an underwriter review your income, your assets, your credit, and as well as getting an appraisal done. That appraisal is going to make sure that the house is going to be worth what you've agreed to pay for it. We're going to do title work. That title work is going to make sure that you're taking clear title to the property. Any loans or anything prior to you owning it has been taken care of. And then we move forward towards the date that you get to go in and sign your papers to be the new happy owner of your home. Yay, that's the yay day.
Yay day. All right. So I'm going to talk a little bit about different loan programs that are out there. So we're going to demystify some mortgages. So different types of loans that are out there. So there are fixed rates, adjustable, FHA and VA. So basically fixed rates are going to be where it's exactly that. Your rate is fixed for the certain period of time, whatever term you take your loan out for. Adjustable rates, those are generally considered like an ARM loan. So adjustable rate mortgage, lots of acronyms and percentages and stuff in the mortgage world. And then FHA. FHA, a lot of people think this one is the first time home buyer loan. It does work for the first time home buyer program, but it's the Federal Housing Administration. And then VA for our veterans. So fixed rates, we have programs that do anywhere from a 0% to a 20% down payment. Adjustable rates for our loans, for example, considered the ARM loans, you need a 20% down payment for that one. And then FHA allows for as low as a 3.5% down payment. And then for VA, that one you could do a $0 down payment. There is also USDA or Rural Development. That's another program that's out there that does offer a $0 down payment as well. So importance of interest rates. So one thing that I get a lot of questions on is, what's my rate going to be? So when we do pre-approval to find out, kind of the amount that you qualify for, those sort of things, the rate at the time that you're pre-approved does not mean that that's what your rate will be. So when you do a pre-approval and say, for example, today's rate is at 7%, okay? It doesn't mean that that's what the rate's going to be when you have a signed offer on a home. So there's like a rate that you're qualified off of and then what your rate finally is. So the rate, once you have a signed purchase agreement, is when it can be locked. And then what rates are doing at that time is where you get to be. Loan terms, anywhere from 5 years to 30 years. So depending on what you choose for that determines what your monthly payment is, along with your loan amount and interest rates and all that beautiful stuff.
Then we're going to look at what to look for when you're looking at buying a home. Some of the things are to consider on that home is maybe you have children. What school district maybe, where's that house located, closest to which school, maybe your job, things like that, maybe that neighborhood. Those are big things to consider as far as, like I said, on the next one, right? Location, location, location. That's really the biggest thing to really think about. Is you might find a home that is a little further than what you'd like. And maybe you start thinking, okay, well, I could make this work. I hear that quite often. And really having that conversation of, okay, well, where do you work? How far is the commute that you'd have to do? So different things like that to really start narrowing down and thinking, because you might really love certain things about it, but thinking about, okay, making that commute every day, if you have kids in school or, various things like that that might go on in your life, is that something that you want to commit to doing for, 5 years, 10 years, 15, you just don't know. So those are big things to really think about. Also, the size of the home, the layout, how old that home is. Are they going to have lots of kind of maintenance items that are going to have to be coming up soon? Replacing the windows. Maybe it needs a new furnace or a roof. Also, are you going to be expanding your family? Kind of thinking ahead that maybe right now you don't need, say, 3 or 4 bedrooms, but maybe in a couple of years you might, and really just thinking about that. Also considering future resale. I know my husband and I, when we bought our first home, we don't have any kids, but the idea of, okay, buying a 2-bedroom home, you're really narrowing down who you're going to sell that home to in the future when you're ready to make some changes yourself. So we purchased a 3-bedroom home knowing that that was something, would be more appealing to maybe a small family that's getting started. So those are just things to consider when you're looking at homes, and really kind of thinking for the future when you're buying that home, because it's a really big purchase and it's a big decision, and just kind of setting yourself up for the future that you could live in that home for quite a few years before you maybe need to make some changes. Veronica's going to go through some of the final steps here on when started talking about closing costs, appraisals, etc.
All right. So after all said and done, you found your home. You got everything all figured out. It's all beautiful. So we're going to get to your final steps. So basically, understanding closing costs is a big piece. So your closing costs are going to be a conglomerate of all sorts of everything. They're going to be your lender's fees. There's appraisal costs in there. There's title company costs. Those are the main bulk of it. So I kind of alluded to a little bit earlier about with closing costs, generally speaking, about 3% of your loan amount is what closing costs are. And you could potentially have asked the seller to pay those. You want to make sure that when you have an offer accepted on a home and you get what's called a loan estimate, make sure you understand those costs. Reach out to your lender if you're not sure what something is. And when you get to the end, there's what's called a closing disclosure. So you again want to make sure that you know and understand what everything is, that there isn't like big discrepancies. The role of inspections and appraisals. So there's a difference between an inspection and an appraisal. An inspection, Ginger kind of talked about. So when you first go to put in an offer on a home, you can do what's called an inspection, which you basically have to pay for up front, but it could potentially uncover any potential issues. So an inspector is going to go through the home. They're going to fine-tooth comb things, look for stuff that you or I may not potentially see. An appraisal is, excuse me, basically somebody that the lender hires to make sure that the value of the home is there. So say, for example, you're purchasing a home for 200 grand and the value comes back at 205. You've got some instant equity right there. If the appraisal or the value comes in a little less, then we might have to renegotiate or look at some other options or ideas. Excuse me. All right, what happens on closing day? So closing day, so when everything is all said and done, everything's all good to go, you're approved through underwriting, you go to a title company generally, that's where your closing is going to take place. The title company is going to go through all your loan documents. You're going to have to bring in your picture ID, and if you are doing down payment and closing costs, you have to bring in your portion of the funds at that time to closing to the title company. And then the title company takes the funds, or excuse me, cuts the funds to where they need to go, to the seller, to the lender, realtor fees at times as well. and they cut checks. They get the deed recorded in your name, and you get to have your home.
Thank you. All right. Some tips that we want to just remind everybody of is make sure you don't rush the process. It can be, it's very exciting. You come in, you're thinking, okay, I'm going to buy a home, and you're super excited and, thinking this is just going to be the great process. We're going to go out and we're going to be in our new house in, a month or two. Just don't rush that process and make sure that, the house that you're deciding to purchase is the house that, you love it. It's got the great location. There might be some things about it that, you don't 100% like, but, there's going to be some concessions, right, that you need to make, but making sure that you're finding the house that has some of those big things that you really feel that you would really like to have. And it could take you 6 months. It might even take you a year, but just make sure you kind of stick to, finding that house that really fits some of those big bullet points for you, and stick to your budget is another big thing. It's so easy, especially right now, to go above where you feel comfortable. As I mentioned earlier, we're going to talk to you about where do you feel good with your budget? Where would you really feel comfortable with a payment? And it's so easy to slowly start creeping up further and further away from where you feel comfortable to really saying, yeah, I could probably make that work. I can make that work. And it's already at the top of your budget. With your budget, whatever that dollar amount is, after that first year, your payment is going to adjust up or down, typically up according to what your property taxes and your homeowner's insurance are doing. So, if you're saying, yeah, I can do this, after that first year, your payment might already be out of where you feel comfortable with. And the only thing that you can control is your homeowner's insurance in that number. And that's not going to adjust it typically that much if you shop around. So just really sticking to your budget and knowing kind of, it might take a little bit to find the home that you want, but there is one out there and it is going to happen for you. And don't try to get discouraged. I know it's very hard not to get discouraged once you've been looking for a few months and you just come in, all fired up, and it kind of starts to take the air out of your balloon. But just really knowing it's going to happen for you. It just might take a little while. And then don't be afraid to ask questions or seek out advice on things. There's never a dumb question. I hear that all the time. Well, this is probably a dumb question. There's never a dumb question. Any question that you have regarding, closing costs, or what do I do about credit? How do I fix this? What kind of any questions that you have about house buying, definitely ask them, because we want you to feel educated in the decisions that you're making. And I know a lot of people will go out online and look, and sometimes the answers that you find are not always correct, or maybe they're just kind of a general, depending on what you're doing. Some states have different regulations on certain things. So just making sure you're reaching out and asking those questions. I think that's kind of all we had. We have some questions, I think.
We do. One of the questions that came in, is there a good way to estimate what total closing costs or potential closing costs might be?
I think that's one of those questions that I think Veronica did address. I would say average about 3% of the purchase price, or I'm sorry, your loan amount. However, definitely that's one of those questions that you can call and we can give you a general idea of what that might look like. We just plug in an estimated purchase price and ask you questions about if you have a down payment, and then can go ahead and come up with an idea of what that might look like, and as well as give you a rough idea what that payment might look like as for you.
Thank you. So another question that came in is being self-employed. How does that impact the process? Does it change the approval interest rates?
Self-employed doesn't impact rates and such. So self-employment, generally speaking, with any type of employment, you need to have full-time employment. Self-employed, we want a 2-year history, so we need 2 full years of tax returns to be able to calculate where income is at on that. But that doesn't necessarily affect the interest rate or approval. The approval goes based on, you know, credit score. The loan program itself has some minimum credit score requirements as well, but not as far as the self-employed piece. So generally 2 years is kind of what lenders want to see for employment history, whether you're self-employed or W-2'd.
All right. Another question that I have received for your department, you guys, is can you talk a little bit more about escrow? What it is, how does it affect me? Can it change? All that good stuff.
Escrow account. So what that is we are going to, your payment includes homeowners insurance and property taxes, and maybe private monthly mortgage insurance, depending on your down payment and the type of loan that you're doing. At closing, we are going to collect a certain number of months to get your escrow account going. What that escrow account is it's an account that every month, part of your payment with that taxes and insurance is going to go into that account. And we are going to pay the taxes and insurance for you when they come due. Your homeowner's insurance will be annually, and your property taxes will be due in May and October. And part of the question. Then if taxes and insurance adjust up or down, again, typically up, then your escrow account could become short, which means then not only is your payment going to adjust for the increase of taxes or the insurance, or maybe both, your escrow account will be short. So then you are going to need to either come up with that additional monies that would get deposited into your escrow account, or you could let your payment increase more to absorb that shortage. So your payment could really look at, you know, jumping up quite a bit depending on what happens with it. Good question.
How about another one that I have received is if I'm working at one job when the home buying process starts, but then I switch jobs, does that affect things?
It can, if you are going from kind of like what I talked about with the 2-year employment history. So if, for example, you were at an employer for 2 years and you're changing jobs into another full-time position, that you're usually fine. If you're changing from like a full-time employer going to self-employed, that one's going to be a trickier one. We don't have a way to verify what your income is being self-employed. And the magical number in the mortgage world is generally 2 years. We want a 2-year employment history and 2 years on your address, those sort of things. We just have to be able to document everything. If you're going from a full-time job to a part-time job, you have to have a 2-year history to be able to use part-time income or employment as well. So, yeah, very good.
And also one more of the question that I received was in regards to a contract for deed. If I'm on a contract for deed right now, how can I put that into a mortgage?
That is going to kind of depend on how we move forward is how long you've had that contract. So if you have had the contract for 12 months or more, then we can treat it like a refinance, and you can roll the closing costs into the loan. And you cannot take any cash out, though. Maybe you have lots of equity in the property. You cannot take any cash out. You can only roll the closing costs in and pay off the contract holder. We are going to have to verify that you've made 12 months of your payments on time, and we'll have to get that documented through checks or money orders, or maybe you do a transfer every month from your account. But we can definitely treat that as a refinance, and you wouldn't have to come up with any money at closing. If you have it less than 12 months, then it's considered, even though you are purchasing the property still from them, it's still considered more of a purchase, where then you're going to have money for down payment, and that additional based on the purchase price that you've got with them. So we can definitely do it. It's just a matter of which way we have to proceed. A lot of people tend to sometimes wait till they've had it for a year. That way they can just do a refinance and not have to come up with that additional money.
Thank you. Another question did come in regarding first-time home buyers. Like, what does it look like? Do they require less money down? Do they have different interest rates than conventional or FHA, VA loans? Could you talk a little bit more about first-time home buyers?
You bet. So first time home buyer is, there's not specifically a loan program that's called first time home buyer. There are programs that work for first time home buyers. So the USDA or Rural Development Program, that's a $0 down payment program, which can be used for first time home buyers as well. Pretty much all of the programs can be. So when I say program, basically what I mean by that is there's conventional loans, there's FHA, there's rural development or USDA and VA. So depending on the program and what the requirements are for that. So there are the low down payment programs that work. Conventional has one that works for first time home buyers, which is as low as 3%. FHA has one that's 3.5%, and then VA will also work if you're a veteran for $0 down payment. Interest rates are going to go based on the program. So not necessarily just because it's a first time home buyer. So it's, if that makes sense, where it first time home buyer works to be able to use those programs, if that makes sense.
What I'm hearing is to sit down with one of you and come up with the best plan available for the individual.
Yeah.
Yep. And we go through, so like when I do a pre-approval, for example, it is, because not everything, kind of like Ginger talked about at the very beginning. So if your friend says, well, I was able to buy a house with no money out of pocket. Well, okay, their situation might be different than what yours is. You may have more income than they do. You may not qualify for some of the different programs that are out there that they did. Credit scores could be different. There's lots of varying pieces that kind of come together to put this puzzle together. So when I'm doing a pre-approval, I usually like to, sit down with you, kind of get to know what your comfort level is. I want to know, for example, what sort of monthly payment is affordable for you. I usually tell people, hey, I do my pre-approvals a little bit backwards. I don't want to go, here you go, here you're pre-approved, happy house hunting. And you're out looking for a property that is maybe out of your comfort level. So I want to start it out with, hey, what's payment that you can afford? Do you have anything as far as down payments and closing costs? Because they're two separate pieces that you have to keep in mind for our little puzzle that we're putting together. And try to figure a program that works good for you. So FHA may work better for you than it did for your friend because of the situation and where things are at. think there was another question.
There was another question that came in and it was on capital gains. So you guys tell me if you can answer this, but how long do you have to keep your home to avoid capital gains?
Yeah, I would direct them to go speak to their tax accountant on that question. I would add, kind of to what Veronica was saying a little bit on people getting pre-approved. If they're not really looking to get pre-approved right now, maybe, 6 months to a year, is make sure that you're not taking out any new debt, not buying any new toys, buying new vehicles, and look at if you've got some credit cards out there, look at trying to get those paid down and try to save some money if you can to go towards any closing costs or down payments or anything like that that's out there. I know right now it's kind of tight and hard to do that. Easier said than done sometimes, but definitely, try to kind of figure out within your budget if you can, kind of do that, get those things paid down. We see a lot of times people too will go buy a vehicle and then come in to get pre-approved. And if they wouldn't have bought that vehicle right then, we would have been able to help them. So just maybe even having the question, right? Like we were talking about, seek out advice and ask questions, is definitely call us. And we have these conversations every day. I'm looking at buying, I need a new vehicle, but I also want to look at a house, and just having that hard conversation and giving them some numbers. And then they can just, you can decide kind of which is going to happen first, I guess.
I don't see any more questions that have come in, so I don't know if there's any from the audience in person. But I guess my final question would be is how can people get started with both of you or with our mortgage department? Where can they go and how to begin?
We just had a question in person here of, we talked about the pre-approval is good for 4 months. What happens if it takes, 6 months or 8 months? What happens? After that 4-month period, when it gets close, we're going to be touching base with you every couple weeks to see how things are going, or weekly. And it gets closer to that 4 months, we're going to be asking you, do you want to keep your pre-approval active? Meaning you find a house, you're ready to go, and you can write that offer. If you do, then we're going to redo your application. Since you already have an application with us, we can just copy it over, so you don't need to come back in if you don't want to, anything like that. And we are going to do another pull to your credit. So it is going to be a hard pull, and we'll get any updated documentation that we need from you, say pay stubs. But it is going to be another hard pull. But I think, definitely things to consider, because as most of you guys know, if you've been looking at houses, you're seeing they come on, they can be on for a day and be gone, or some of them are staying on a little bit longer now, but you really have to be prepared to be able to write that offer as soon as you see that house come on. And if you really like it and you've looked at it, and go write that offer. But definitely things to, think about if you want to, still be looking, is to have that credit pulled. And I know that becomes the question as well, you keep pulling my credit. Now my credit scores are going to start to go down. So again, those are just the conversations that we're having on, if you're really looking to buy a house, those are some of the things that we have to do to make you prepared. And also, in the meantime, if you've been approved, don't don't go buy any car loans or toys, or, something happens and you go out and use your credit card, go on vacation, and now that could affect you as well. Now we're repulling credit, and now you're not approved. Things happen, but definitely if you have to make any big purchases as well, definitely giving a call, and we can talk you through what does that look like. Say your car breaks down, right? Something happens, I need a new car, I was in an accident. And what is that going to look like for you? So again, going back to that advice, or calling who your lender is, and just really having those conversations.
Do we have any other questions out there, Nicole?
I don't see any other questions that have come in.
Did you ask a question? Or no, about getting in touch with us? I missed it because we had the question in here. I'm sorry. So, if we don't have any other questions on your screens, you'll see both mine and Ginger's contact information. If you have questions on something, if you want a scenario ran, certainly feel free to reach out. We can run some rough numbers. Oh. I can always reach. Okay, so if there's any questions, as always, please let us know. And if not, thank you guys for your time. We have also some other additional upcoming sessions on Monday, October 6th. Ginger and I will be doing another seminar on choosing the right loan, so we can go over additional questions on actual loan products and stuff, or loan programs, excuse me. And then there is also another one that Ginger and I won't be doing this one. It's on fraud and scams on Monday, November 10th. It can be done virtually or in person here as well. Monday, November 10th, 5:30 to 6:30, it looks like. And the choosing the right loan that Ginger and I are doing on Monday, October 6th can also be done virtually or in person here at the Lakes Area Habitat. My goodness, sorry about that. And that one's 5:30 to 6:30 as well.
All right, well, Ginger, Veronica, thank you so much for your presentation this evening. I want to thank everybody who joined us in person or virtually. It looks like we are about 15, 16 minutes ahead of schedule, so I think we could probably give everybody a little bit more to their evening back. But again, any questions, feel free to reach out to Ginger or Veronica, and they will be able to talk you through the process. Have a great evening, everybody.
Thanks, Nicole.